Hi, welcome. It's Mary Ellen McGonagle with your Daily 5 for Tuesday, June 8th. Bit of background for those not familiar. I do have quite a bit of experience both on and with Wall Street. For many years, I advised top equity portfolio managers on not only the broader markets, but also individual stock selection. From there, I did found my own MEM investment research firm where I developed and still create top performing newsletter, my bi-weekly MEM Edge report. More recently, I've taken a role at Simpler Trading where I'm the Senior Managing Director of Stocks. For those of you interested in more information, I urge you go ahead to my website, meminvestmentresearch.com, to see more information for my work and also take a special offer trial of that bi-weekly newsletter for 4 weeks. Let's take a look at what we're going to be sharing with you today. I am going to be talking about catching stocks that are early in their upside advance. These beaten down stocks that I'll be sharing with you are beginning to repair themselves, oftentimes getting in front of these stocks as they reverse downtrends can be very profitable. We're going to start with sharing an example of a stock that was part of my MEM Edge report. 2 different periods when we experienced a downtrend reversal in Shopify. This is a software stock that provides online platform for individuals and businesses to sell their products. So I'm taking you back originally to the end of 2019 when Shopify did emerge out of this downtrend. So in essence, instead of potentially capturing the stock at its peak in price, you are looking for that reversal. And oftentimes I do like the stock to have a history of relative outperformance. This is going to be all about having top management, top growth numbers, which are still in place. But the group, in this case, software stocks, did fall out of favor in the fall of 2019. So let's take a look at those characteristics that identified it. And we did put the stock back onto that MEM Edge suggested holdings list. First up is a break of the stock back above its shorter term simple moving averages. In this case, the green is your 10-day, the purple, the 21, and then the red is your 50-day simple moving average. So we have a decisive break back up above on high volume preferably. It's not always necessary, but I do have more confidence when there's volume in place. It's telling you that investors, particularly institutions, want in. Secondary momentum indicators, your RSI and MACD, simultaneously turning positive. And you can see that Shopify did have an extensive uptrend going into that 2020 bear market. This is one of the few stocks that we did hold on to. The growth prospects were strong. They did prove to be even stronger than we had anticipated. But more importantly, let's take a look at the second downtrend reversal in Shopify, taking us back historically. This is coming out of that bear market in 2020. The same dynamics here. The stock breaks back above these simple moving averages on heavy volume. This was management guiding higher, so you did get the boost from positive news from the company. And Shopify did go on to gain 203%. It was certainly among the big winners from our MEM Edge report last year that are still continuing, many of them, to carry into this year. And we can see as a negative, certainly throwing this in as a bonus, we did remove the stock from our suggested holdings list last fall upon a break back below those simple moving averages. So from here, I'm going to share with you some current examples of stocks, and not all of them are ripe or ready, but they certainly are beginning to firm up and should be on your radar if you are interested in these turnaround type of stocks. This is Penn National Gaming. They are one of the larger gaming conglomerates, both brick and mortar as well as online. The online gaming portion is a big part of their growth outlook going forward. But let's go back and take a look at historical precedent as far as this downtrend reversal. I'm taking us back to the beginning of November. Certainly we did see a lot of this dynamic back here when the vaccine was first announced, but technically what we're looking for again is that break back above those simple moving averages. Simultaneously, you have your outside momentum indicators turning positive, and we can see that Penn National had a very significant uptrend going into March of this year. Similarly to other growth stocks with high multiples, it did fall out of favor. So what we are looking for here, this is a current chart. Ideally, we would need to see a break back above these simple moving averages, because you can see on the way down, as opposed to acting as a floor, they act as a ceiling, as resistance. So we are going to need to see a break back above, and ideally we will want that to occur on volume. Again, not necessary, but an extra boost to the confidence. And we can see here today that the RSI did turn positive, and the MACD did have that black line up through the red. We're not quite in positive territory just yet. The company did announce earnings on May 6th, 110% year-over-year earnings growth, 111% above estimates. The company is continuing to get approvals among various states for their online gaming efforts, which of course is good for their growth prospects. So let's go ahead and take a look at the next stock. We're looking at Chewy. For those not familiar, this is an online-only retailer of all things pet related, and it ranges from foods to various products. A big winner during this lockdown pandemic as individuals pampered their pets while they were at home. But again, in this late February, beginning of March, a lot of these higher multiple, high growth stocks, Chewy, all of this was about explosive revenue growth. They're still not quite there yet on the earnings side, but the growth prospects revenue-wise do remain quite strong. The stock had a very significant sell-off, but again, similar to Penn, it is in the process of firming up. We also want to see a break, in this case, up back above that blue 200-day simple moving average. You do have a positive RSI, the MACD just poised to turn positive. Another item worth noting is that Chewy is due to report their earnings this Thursday. The company is seeing analyst upgrades going into earnings, which is generally quite bullish. Also, a lot of the products with Chewy are subscription based, so I would anticipate that the numbers could be very compelling indeed. Let's go ahead and take a look. Next up is Digital Turbine, APPS. This was a big winner on my MEM Edge report during this uptrending period until we did remove the stock upon a break below key support. So it's definitely on my watch list, keeping an eye out for a potential downtrend reversal. The company last week reported quarterly earnings that were 400% year-over-year growth, 31% above estimates. And the company provides the ability for mobile content to be distributed. So again, we are going to need to see a break back above, in this case, this red 50-day simple moving average. The RSI is positive, MACD just poised to turn positive. So we are keeping an eye on this stock for an eventual bullish phase as far as an uptrend. Next up is Lyft. This is the second largest as far as ride share app, and it is certainly viewed as a reopening trade. So I'm going to go ahead and take us back to the beginning of this year when the stock did emerge out of this downtrend. Very similar dynamics I've been sharing with you as far as breaking above support and breaking above resistance on volume with your outside momentum indicators turning positive. And we can see that Lyft is potentially in the very beginning stages here. They did come out with earnings the beginning of May that were 41% above estimates, which in turn did get the stock into a beginning stages as far as this downtrend reversal. From here, I would like to see more volume. We're not getting a whole lot of volume. I want to see that interest that's going to help propel the stock higher. And then last up here is 3D Systems. Triple D is the ticker symbol. We are a little more advanced as far as this downtrend reversal taking shape. I did want to point out a couple of items here. On May 10th, this high volume day, this particular company came out with earnings that were 525% as far as year-over-year earnings growth, 750% above estimates. If I sound excited, it's because those big numbers often can be a very good reason for the stock to reverse its downtrend. That's why I would keep Chewy on your watch list, and we've seen this in some of the other examples. So it did begin this downtrend reversal possible phase. And again, from my work, I waited until the stock broke back above that 50-day simple moving average before getting into the stock. We can see the outside momentum indicators trending positive. So from this period, currently, 3D Systems is in a very nice uptrend. Any kind of pullback has proven to be an ideal buy point, and I do see further upside for this particular stock. And that's it for your Daily 5. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.